Let's be honest, the UK tax system is brutal for most of us. Between income tax, capital gains tax, and dividends tax, it's like you're getting taxed just for trying to build a better future. But what if I told you there are completely legal ways to reduce or even remove completely some of the tax on your investments? In this video, I'm going to walk you through the smartest tax shelters available to UK investors, including stocks and shares ISAs, SIPs, and other strategies to help you build wealth and keep more of it. But first, I'm going to give you a real example of why investing is hugely important. Let me take you back to 2020 when I was stuck out an old man during COVID with work. One of my colleagues was a 60-year-old man full of regrets, and he told me that he had no pension and that because of the good jobs he'd been on over the last 20 years, he could have easily invested £1,000 each month for that 20-year period. Let's assume he invested into a low-cost index fund and assume he got an average return of 10%. He would have ended up with a huge £759,000 at 60, a huge sum of money. This demonstrates the importance of investing as soon as possible. By the way, if you want help with starting to invest in the stock market, I can help you with my 24 years of experience. Just type yes below and I'll send you my index investing cheat sheet, saving you serious time and money. Chapter 1, the problem. Why UK investors lose to tax. Every time you make money from investing, the HMRC wants a piece of the action. Capital gains tax up to 24% on profits when you sell shares. Dividends tax up to over 30% depending on your tax band. Income tax 20%, 40% or even 45% depending on what you earn. And there's more tax. The tax-free allowance have been shrinking. The capital gains allowance is now just £3,000. The dividends allowance a pathetic £500 in 2025-2026. So if you're building wealth the traditional way, investing in stocks and index funds, for example, the taxman is already in your pocket. But don't worry, this isn't just bad news in this video. There are ways to protect yourself. Chapter 2, the Stocks and Shares ISA, your first line of defense. A Stocks and Shares ISA is the most powerful tax wrapper available to everyday UK investors. Here's how it works. You can invest up to £20,000 per year as of 2025. Any gains you make are completely tax-free. Any dividends you receive are completely tax-free. There's no capital gains tax when you sell. There's no income tax when you withdraw. This is your personal tax-free wrapper. And once the money is inside, it's protected for life. You can invest in individual UK stocks or US stocks, index funds, ETFs like the FTSE 100 or the SP 500, dividend-paying companies, bonds, and investment trusts. And don't forget, if you have a partner, they also get a £20,000 allowance, meaning a couple can shield £40,000 per year from tax. Missed it this year, unfortunately, the ISA allowance doesn't roll over. Use it or lose it. By the way, if you want to know the Vanguard index fund I've invested into since 2019, see below for a recent video. Chapter 3, the SIP, your long-term wealth machine. A SIP, or self-invested personal pension, is like an ISA. Here's what makes it amazing. You get a tax relief on contributions. Whatever you put in, the government tops it up. Basic rate taxpayers get 20% relief. Higher rate can claim up to 40 to 45% through your tax return. Example, you contribute 8,000, HMRC adds 2,000. Boom, that's £10,000 invested. Your money grows tax-free, just like with an ISA. Investments inside your SIP grow free from capital gains and dividends tax. Tax benefits at retirement. At age 55, 57 from 2028, you can withdraw 25% tax-free. Take the rest gradually, taxed as income, with personal allowances applied. And if you're self-employed or run your own limited company, your company can pay into your SIP, reducing your corporation tax bill. It's long-term, yes, but it's one of the most efficient wealth-building tools in the UK. Before we crack on, I just want to say that this video doesn't contain any financial advice. Chapter 4, tax-efficient use of your spouse. Married or in a civil partnership, you have another powerful strategy at your disposal: income and allowance splitting. Here's how to use it. If your partner earns less or nothing, you can shift investments into their name. This lets you use the ISA allowance and their tax-free threshold. It's especially useful if one partner is a higher rate taxpayer and the other isn't. Here's an example. You're maxing out your ISA and your spouse isn't investing at all. By transferring ownership of some investments, you can shield double the capital and possibly reduce dividend or income tax exposure as well. HMRC allows transfers of assets between spouses without triggering capital gains tax, which is really helpful for long-term tax planning. If you want proper advice, proper tax-free planning, I would take the time to speak to an accountant, a professional, because I'm far from an expert on this very important part of investing. Chapter 6. Use your losses, claim your wins. Sometimes investments go down, but that doesn't mean you're useless. If you sell at a loss, you can offset that loss against gains in the same year or carry it forward into future tax years. Let's say you gained £8,000 from one investment, lost £3,000 on another, you're only taxed on £5,000. This keeps more money in your pocket and reduces the impact of capital gains tax. Just make sure to report those losses to the HMRC, even if you don't need to use them immediately. Chapter 7. Stay organised and avoid penalties. The best strategy in the world is worthless if you don't track it properly. Make sure to keep records of all investments, sales and dividends. Know exact dates and amounts. Use software or spreadsheets if needed. File your self-assessment by 31st of January if applicable, and don't forget the tax year ends 5th of April. If you're unsure or have a complex situation, speak to a tax professional, as I've mentioned. The peace of mind is worth it. And don't forget, you can access my index investing cheat sheet by typing yes in the comments below. Summary. So to wrap it up, if you want to grow wealth tax efficiently in the UK, focus on these. Max out your stocks and shares ISA, invest consistently into a SIPP for retirement, use spouse allowance, offset losses and keep your records clean. You don't need to be rich to invest smart. These tools are here for everyone. And the earlier you start using them, the more powerful they become. Basically, you need to focus on education. Education, education, education. I believe that if you become financially literate, this eventually leads to financial freedom. Anyway, thanks for watching, and if you've taken value, hit the like button and maybe send it to someone you care about so they can avoid tax in the UK.